Welcome to the deep dive. Today we're tackling something you might see every day but maybe don't think too much about. Packaging. Specifically, we're getting into the innovative world of rigid plastic packaging.
That's right. We're looking at Mold-Tek Packaging Limited.
And we're going to unpack their latest numbers, the Q1 FY26 results for the quarter that ended June 30th, 2025.
Yep. We've got the independent auditors' review reports, the investor presentations, and press releases. Our goal is really to sift through all that and figure out, what's actually going on. Not just the figures, but what they mean for a company like this.
Right, a company that's definitely a leader in its field. So if you're curious about how businesses handle growth, innovation, market pressures, especially in a sector this vital, well, this deep dive is definitely for you. Okay, so let's start with the basics. Mold-Tek Packaging, who are they exactly? Why focus on them?
Well, they're a major force in rigid plastic packaging here in India. They've been around quite a while, actually, founded back in '86. And they went public in '93, so they have a long track record. Operationally, they're pretty substantial.
How substantial are we talking?
We're talking 10 manufacturing units, plus 2 stock points across the country, and their injection molding capacity. Over 63,000 TPA. That's tons per annum.
Wow, okay. That's serious scale. But, scale isn't everything. What makes them stand out? Is there an edge?
Yes. I think what's really fascinating is their innovation. They were pioneers, in India at least, of something called in-mold labeling, or IML.
IML, tell me more about that.
So these aren't your standard sticky labels. They're high-def, photographic quality labels. And the process is integrated right into the molding they mention, 100% hands-free operation. Plus, and this is key today, they're 100% recyclable.
Okay, hands-free, recyclable, high def. That sounds like a technological advantage.
It absolutely is. And it connects to another point, their backward integration.
Meaning they control more of their own supply chain.
Exactly, from raw materials onwards. This gives them, as they put it, superior margins compared to others in the packaging space. Better control, better quality, better margins.
Got it. So it's a combination of scale, tech innovation with IML, and controlling their process. And clearly, big brands trust this approach.
Definitely. You look at their client list: Asian Paints, Castrol, Shell, Mondelez, Hindustan Unilever, Nestle, Dabur, Marico, Cadbury, Himalaya, ITC.
That's a who's who of consumer goods and industrial companies.
It really is. And it's not just about having the capacity. It's about delivering that quality and innovation consistently.
Which probably explains the recognition they've received, too.
I'd say so. Things like Forbes naming them one of Asia's top 30 under $1 billion in 2023, or winning the Best Packaging Company award 3 times in a row. That doesn't happen by accident.
Okay, so a strong company profile. Now let's get to the meat of it, the Q1 FY26 results. The numbers for the quarter ending June 30th, 2025. What did they actually report? Did the performance match the profile?
Well, looking at the year-on-year comparison, Q1 FY26 versus Q1 FY25, the story is definitely one of robust growth. Pretty strong, actually.
Okay, break it down for us.
All right, so sales volume was up 15%. They went from shipping about 9,894 metric tons to 11,378 metric tons.
15% volume growth, okay.
And revenue.
Total revenue saw a bigger jump, up 22%. It hit INR 240.55 crore. And just for context, a crore is 10 million Indian rupees. That's up from INR 196.72 crore the year before.
22% on the top line. What about profitability? EBITDA.
EBITDA showed even stronger growth, a jump of 29.21%. It went from INR 36.67 crore to INR 47.38 crore.
Nearly 30% growth in EBITDA. That's significant. And the bottom line, profit after tax.
Even better, actually. PAT rose by an impressive 35.5%, from INR 16.53 crore in Q1 last year to INR 22.4 crore this quarter.
Wow, okay. So volume up 15%, revenue up 22%, EBITDA up nearly 30%, PAT up over 35%.
Exactly.
It tells you something about efficiency, not just sales.
Right. So what does this mean in terms of margins? Are they keeping more of each rupee earned?
Yes, precisely. If you look at the margins, the EBITDA margin improved by 106 basis points. It reached 19.70%. And the PAT margin improved too, by 91 basis points, reaching 9.31%.
So over a full percentage point gain on the EBITDA margin, nearly a point on PAT margin. That's not just growing, it's growing more profitably.
Correct. It suggests they're managing costs well, maybe getting benefits from that scale and backward integration we talked about earlier. It shows good operational leverage.
Okay, that makes sense. Now, growth like this usually has specific drivers. Can we see where it's coming from? Which segments are really powering this?
We can. Let's look at the revenue breakdown for Q1 FY26. Paints is a big one, bringing in INR 46 below 05 crore.
Still a core segment for them, clearly.
Absolutely. Then you have lubes, which contributed INR 23.98 crore. And that's up quite a bit from INR 15.68 crore in Q1 last year.
Nice jump in lubes. What about food?
Food also showed strong growth. INR 23.09 crore this quarter, compared to INR 13.79 crore in Q1 FY25. So another big increase there.
Significant growth in both lubes and food then. Anything else?
There's also Q-Pack, which added INR 15.21 crore. That's also up from INR 13.31 crore year-on-year. So broad-based growth across these key areas.
Okay, interesting. But I noticed you haven't mentioned pharma yet. The presentation materials really highlighted that segment, didn't they?
Ah, yes, pharma.
Yeah.
That's where things get really interesting. It's a smaller segment overall right now, but the growth trajectory is, well, exceptional.
Tell me about it.
Okay, so pharma sales in this quarter, Q1 FY26, hit INR 6.66 crore.
6.66 crore. How does that compare?
Well, compare that to the previous quarter, Q4 FY25. It was INR 2.27 crore then.
So a huge jump just from Q4 to Q1.
A huge jump. And compared to Q1 of the previous year, FY25, it was only INR 0.79 crore.
Wow. From less than a crore to over 6.5 crore in a year. That's phenomenal growth.
It really is. That quarter-on-quarter growth from Q4 to Q1 is about 11.37%. If you annualize that, you're looking at something like 45% growth rate.
45% annualized run rate. What's driving that surge in pharma?
It seems to be a combination of factors. Mold-Tek's reputation, particularly with that advanced IML technology, plays a big role. Plus, they have a DMF that's a drug master file facility, which is critical for pharma clients. And they emphasize their stringent hygiene standards.
So the quality and compliance aspects are key here.
Definitely. And this combination seems to have positioned them perfectly for the EV tubes and stoppers market that's empty vials, specifically for nutraceuticals.
Ah, the booming nutraceutical space.
Exactly. And they note that demand there is just continuously growing. So they've tapped into a real high-growth niche using their existing strengths.
Okay, so impressive current performance, especially boosted by pharma. But what about the future? What strategic moves are they making to keep this momentum going?
They seem very focused on building on this. First, they're optimizing their printing capabilities. They've added capacity. But they're also bringing in new tech for IML label printing. The key outcome here, they say, is enabling lower MOQ.
Minimum order quantity, so making their advanced packaging accessible to smaller players too.
Precisely. That could really broaden their customer base beyond just the huge corporations. Second, there's a continued focus on IML adoption and sustainability. As utilization picks up in their newer plants, they expect margins to improve further. And big clients like API and Aditya Birla Group are apparently pushing for more RCPP.
RCPP, recycled content, post-consumer plastic.
Right.
Yeah.
Yeah, so they're aligning with that sustainability trend, which is becoming less of a trend and more of a requirement.
Good strategic positioning there. Any other initiatives?
Yes, diversification is another theme. They're looking to move into newer industries that are less seasonal than some of their traditional markets, like paints. And there's physical expansion, too. A new manufacturing site in Panipat is expected to come online from Q3 onwards.
More capacity coming soon then.
Exactly. Which promises, an even better outlook if demand holds up.
So optimizing tech for broader appeal, leaning into sustainability with RCPP, diversifying, expanding capacity. It sounds like a multi-pronged strategy.
It does. They're not just riding the wave. They seem to be actively shaping their future growth.
Now, whenever we see strong numbers like these, especially unaudited quarterly results, it's important to talk about assurance. What did the auditors, M. and Nandam & Co. actually say?
Right. They provided what's called an independent auditor's review report. It's not a full audit, that's important to stress. The review was done according to a specific standard, SRE 2410. The goal is to get moderate assurance that the numbers are free from material misstatement.
Moderate assurance. And how do they get that?
It's based, as they state, limited primarily to inquiries of companies' personnel and analytical procedures. So, talking to people, looking at trends and ratios, not the deep testing of a full audit.
Which means, and they state this clearly, it provides less assurance than an audit, and so they do not express an audit opinion.
Exactly. It's a review, not an audit opinion.
So what was their conclusion based on that review? Did anything jump out at them?
Their conclusion was quite standard for this type of report. They said, and I'm paraphrasing slightly, based on our review, Nothing has come to our attention that makes us believe these financial results haven't disclosed what's required or contain any material misstatement.
Okay. So no red flags raised by the auditors in their limited review. It gives a certain level of confidence in the figures as presented.
Yes, exactly. It's not an ironclad guarantee, but it's the appropriate level of assurance for unaudited quarterly financials under these standards.
Got it. Okay, shifting gears slightly from finance to governance. Any significant updates there mentioned in the documents?
Yes, there was one notable appointment, Mr. Ashish Kumar Gagor. He's a company secretary in practice,
All right.
and he's been appointed as the company's secretarial auditor.
Secretarial auditor. So focusing on compliance with corporate laws and regulations?
That's right, ensuring everything is aligned with the Companies Act, SEBI regulations, and so on.
And his credentials. You mentioned he's quite experienced.
Yeah, quite impressive, actually. He's a fellow member of the Institute of Company Secretaries of India, the ICSI. Got about 19 years of experience. His firm is peer-reviewed, and he himself is a peer reviewer.
Okay, so well regarded in the field.
Seems so. His expertise covers corporate law, FEMARB matters, SEBI rules, due diligence, even some merchant banking activities. Quite broad.
And this appointment is for how long?
It's for a first term of 5 consecutive years, starting from this financial year, FY 2025-26, running through FY 2029-30, though naturally it's subject to shareholder approval.
5 years. That suggests a commitment to long-term, stable, and robust governance oversight.
I think that's a fair interpretation, yes. It signals seriousness about compliance.
Okay, so let's try and bring this all together. We've seen Mold-Tek Packaging post some really strong Q1 FY26 results, solid growth in sales volume, even better growth in revenue, EBITDA, and especially PAT. Margins are improving too.
Yeah, driven by broad strength across segments, but with a really remarkable surge in their pharma vertical, tapping into that nutraceuticals market.
And strategically, they seem to be making smart moves, optimizing IML tech, embracing sustainability with RCPP, diversifying, and expanding capacity.
Plus, they've got the auditor's review providing moderate assurance on the numbers and a solid governance appointment for the long term. It paints a pretty positive picture.
It certainly does. So for you, our listener, perhaps the final thought to chew on is this. We see Mold-Tek really pushing advanced tech like IML and leaning into sustainability with recycled plastics. What broader ripples might this create? How might this influence the future of the entire packaging industry? And beyond that, how could it shape supply chains in other sectors as everyone looks for smarter, greener ways to package their products?
Yeah, think about how company strategies like these focusing on specialized tech, recyclability, lower MOQs might reflect or even drive those bigger shifts in what consumers want and what the planet needs. It could really reshape how products get to us.